All right. Good morning, ladies and gentlemen, and welcome to MACROACE with your host, Tony. I'm also the head financial analyst at Financial Juice. So we have the Canadian employment change data coming up in about 15 minutes, so let's get into it. Well, if it's not a release that you don't think we should track, but that's down to you. We are going to track it here because it still has a market reaction and it's still very useful for the Bank of Canada and their upcoming meetings for the rate decision. It's up to you if you want to join. Don't have to. It's totally down to you. Right. Canadian employment change. What is it? It measures the change in new jobs being added and includes both full-time and part-time workers. The unemployment measures the number of unemployed as a percentage of the labor force. So similarly to the non-farm payrolls data, you're looking at the establishment survey, which is more or less representing the employment change data, and then the household survey, which represents the unemployment rate. How does it affect the markets? For the currency, you'd expect a strong or bullish reaction if the data is much stronger than expected. And on the flip side, if it's weaker, then a much weaker and a bearish reaction from the Canadian dollar. If you do get stronger than expected data, that plays into the hand of the economy doing quite well. So there's confidence being put into the Canadian dollar. But also, in this circumstance, the central bank may decide to hold off on cutting rates in June and maybe into July or later on, depending on how strong the data is. The stronger the data, the stronger the market pricing then becomes for maybe another month, and less so for June instead, which is what markets are currently looking at for the first rate cut from the Bank of Canada. About 73% is what markets are, the odds are of a cut in June. For bonds, a stronger than expected read would provide bond yields some upside moves with a bullish reaction, similarly to the currency for the same reasons. However, the stock market would be the inverse if the data is stronger than expected, because that means that the central bank will take longer to cut rates, and they will keep rates for where they are for much longer. And the valuations of those stocks or assets in the stock market start to take a hit in the short term. So what did the previous report look like then? So if we're looking at the employment change data, it came in at minus 2.2k, which was much weaker than what the forecast was of 25k. Prior was 40.7k. The unemployment rate ticked higher to 6.1% compared to the forecast of 5.9 and the prior of 5.8. Average hourly earnings came in as expected at 5% comparing it to the prior of 4.9%. Now, the unemployment rate rose 0.3 percentage points to, as at 6.1%, which TD note that was the highest level in more than 2 years, and the participation rate remaining unchanged at 65.3%. Employment by sector showed losses in accommodation and food services, about 27k. Wholesale and retail trade, about a minus 23k decline. And professional, scientific, technical services, there was about a 20k decline. There was a positive offset that was seen in healthcare and social assistance, about 40k. And lastly, total hours worked fell about 0.3% month on month, while wages were up 5.1% year on year from 5% in February. So where is the economy at the moment? So you have interest rates still unchanged at 5%. Inflation ticked slightly up to 2.9% compared to 2.8%, but wasn't enough to derail expectations for a June rate cut from for the Bank of Canada. Average hourly earnings, as I said, we've already gone through that. GDP data, quarter on quarter annualized for Q4 at 1% compared to Q3 at minus 1.1%. Month on month GDP at 0.2% compared to 0.6%. The manufacturing PMI data at 49.8 compared to 49.7. So then the ranges then for the economic release. For the forecast, you have a median expectation of 20k, with a high estimate, according to economists surveyed, a high estimate of 40k and low estimate of 10k, so a deviation of 20k on the high end and 10k on the low end. Canadian unemployment rate with a high estimate of 6.3% and a low estimate of 6.1%. So a 0.1% deviation on either end. Now, with the other points of data, such as the Canadian average hourly earnings, that is forecasted to come in at 4.7%. If the data, for whatever reason, is mixed or doesn't really go beyond the highs and lows of what is expected, then markets may turn their attention to the wage data or wage inflation data to gauge what the central bank might do at their upcoming meeting. It hasn't really had so much of an impact on the Bank of Canada's expectations for what they might do for rates, but it doesn't mean that they disregard it altogether. So if you do get a deviation of 0.2% from the Canadian average hourly earnings year on year either way, so 4.5 or 4.9, that could provide some extra volatility or the needed volatility to then jump into the market and then jump into some opportunities. If average hourly earnings comes in higher than expected, then you could expect a bullish reaction from the Canadian dollar. If it's lower than expected, then you could see more of a bearish reaction from the Canadian dollar. That's if the data is mixed. If there isn't too much of a deviation on the employment change figure or the unemployment rate. So usually it goes, and Arno's mentioned this in his earlier video in the day, in the FGA Elite video, in terms of importance, you have the employment change data, which comes first in regards to importance, then the unemployment rate, and then anything else that surrounds that. So if the main figure, the employment change data, has a good strong deviation, let's say of 20k or more, or 10k or more on the low end, then you'd expect the markets to focus on that figure. If not, then you're looking at the Canadian unemployment rate to focus on if there isn't too much of a deviation. And if that doesn't have too much of a deviation, then you're looking at the other points, such as the average hourly earnings, which will be the next point. All right, then forecast and expectations. There's not really much that has been provided by the economists, but from Scotiabank, their expectation is 25k. BMO, they see 15k. CIBC sees 20k, and Bank of America sees 20k. And TD, on April 5th, in the last report, they said that the report casts a cloud over the Canadian economy, but it is unlikely to change the Bank of Canada's thinking when it meets. Markets are increasingly betting that the Bank of Canada will pull the trigger on its first rate cut in June. With that being said, if you do get much stronger than expected data, then the expectations for when the first rate cut could be altered. Maybe not that much altogether, but if you do get strong data either end, whether it's a strong amount of jobs being added, or there have been much fewer jobs that have been added to the economy than expected, then the bets will drive how the Canadian dollar could move within the markets, and you could see stronger moves. So clarify, the bigger the deviation, the bigger the reaction that you could hope for. If data's in line, then it could be a little bit choppy and it's not so clear. And then you're reliant on how the market's going to react to it. And then you have to go through the other data to kind of interpret it and then figure out why the market's reacted in such a choppy way. And then by then it might be too late. So having a nice clean figure given to you with a big old deviation makes it easier to understand which way the market could go, or give you a hint as to which way the market could go. And then, as said, the first cut fully priced in for July with a 73% chance of a cut implied for June. Okay, so Macklem said on April 10th that June rate cut is possible. And he also said on May 1st that growth in the economy looks to be picking up. And on May 2nd said that the bank could start cutting rates before the inflation rate hits 2%, citing the importance of seeing a sustainable decline in inflation. And from the Bank of Canada meeting minutes, Governing Council was more confident that inflationary pressures would continue to ease even as growth picked up. So here was how the markets had reacted last time to their data. You can see that little choppy wick reaction from the data, and then the weakening from the Canadian dollar. And here we can see on the dollar CAD had a nice decent reaction. Actually, on the dollar CAD, and we'll look at the deviations sheet, the dollar CAD, if I can remember correctly, it had the biggest market reaction compared to all the other currency pairs. Usually, it's been GBP CAD that's enjoyed, or CAD JPY, that's enjoyed the biggest market reaction. But last time round, it was dollar CAD. It was there we go, GBP CAD. So on there, 8:30, you can see that the market reaction wasn't so strong, and it didn't really last that long. And finally, with EuroCAD, again, a bit of a chop there, and then a move towards the upside off of the weaker than expected data. That was a 27k deviation for the employment change, and a 0.2% deviation for the unemployment rate. So let's get into it. We've got about 3 minutes left. So if we go to I'll quickly show you the ranges and deviations before we get the data. Okay, so here we go. So dollar CAD had seen, as said, the largest reaction last time round. And then what was next that came up was EuroCAD, GBP CAD, and then you had Aussie dollar, New Zealand dollar, and then CAD JPY. So let's keep an eye on what we've got. Eye on what's moved the most within the markets. As said, it has been a bit choppy between GBP CAD and CAD JPY as to which ones kind of swap with each other as to which one is going to have the strongest reaction. So those two are definitely going to be the ones to keep an eye out for, CAD JPY and GBP CAD. Because we've got about 2 minutes left, so I'll move this out of the way and I'll give you an explanation of the data of how the deviations and ranges sheet works. In summary, it shows you how big the market's reaction was to an economic release. So I'm going to get TICKSTRIKE up and ready. Okay, it's GBP CAD there, up and ready. Got EuroCAD. Let's get Canadian releases set. Okay. Let's see what we've got here. All right. Somebody said, so we got less than half a minute left. Chetty said bullish or bearish CAD for employment change news. Well, you got to wait for the data. Hopefully the explanation I gave you enough of a thought of that, of which way it could go, depending on the data. But don't forget to give the video a like, share the video, subscribe to the channel, get the word out there, and let's see how it plays out. Okay. Okay, so 90k. I completely crushed it. So okay. Who said we should not track the Canadian stats? No use. Well, there's a reason why. So see if we can get a bit of a pull back for a better position. Okay. Let's see. So dollar CAD, which had the biggest reaction last time round. So we had here. So about 48.8 pips towards the downside. Bit of a reversal there on coming through on dollar CAD. Yeah. Oh, good afternoon, Angus. Yeah, immigration has been quite strong within Canada, so that has helped to kind of keep it up. But I want to see what the expectations are going to be for the rate decision now, considering that just blew it out of the water when we were looking for that deviation. Let me just get it up again. Yeah, when markets, well, for the high end, we're looking for a 20k deviation, and then they got a 70k deviation instead, or if you want to be precise, 70.4k deviation. You shorted the CAD. Okay, hopefully it worked well for you. Is it working well for you? I hope it is. Oh yeah. Of course we did. Okay. Yes. We did. We did chat on the news desk. Sorry, I didn't catch. Yeah, no, I do remember now. Your FJ Matrix. How FJ Matrix? Okay. So let's see what we got. Let's see. There's not much volatility now, so it's kind of a bit stuck. So it looks to be, could be a slow burner. But yeah, let's check some oil as well. Yeah, okay, that didn't really do too much. All right. So, whilst you can see that on the screen, don't forget next week we have the inflation data. Again, it's always going to be quite key and important to keep an eye out for. So CPI data and PPI data from the US. We're going to be focusing on the CPI data for the US, and of course that's going to have the biggest implication for the markets and for the Federal Reserve. That'll be on the 15th of May, the day after the PPI data comes out. Don't forget, PPI data, of course, itself is going to be important, but CPI data has always had a much larger, enjoyed a much larger reaction, because that's where most of the action happens. Because PPI data, yes, that's important, but PPI data doesn't really translate so quickly into prices rising for consumers. Hence, the Fed is more laser focused on the CPI data and the PCE data, which is what they prefer to have a look at when gauging inflation within the US. But as said, PPI data and CPI data next week is going to be quite key for the markets. Other than that, there isn't really going to be anything else for MACROACE. For MACROACE, we're going to be covering the CPI data next week. I will, of course, as I have done in the past in the ranges and deviations, covered the market reaction. Let me just close TICKSTRIKE for now, so I get that it show you guys here. Okay. Where are we? Yeah, so I've always covered or put into the deviations and ranges sheet the market reaction for the economic release. Probably is something that we're going to cover again, but I'll let you guys know in the email. You can see here with the CPI data, which sees a much, as I said, enjoys a much larger reaction from here. So if you want to get access to the ranges and deviations sheet, but let me explain to you what it is first. Okay, if you didn't get the explanation the first 5 minutes or so. The ranges and deviations sheet, what it shows you is how the markets have moved depending on the deviation from the economic release. So if we're looking at the Canadian employment change last time round, I'll go through it here because that's what we were looking at initially. Here, this first figure represents the initial market reaction, and it says there was about 43.3 pips moved towards the upside. This is all on a 1 minute candle, by the way. 10 minutes after the release had occurred, going to the end of the candle. Okay, the first figure goes to the wick of the candle to capture the full movement. 10 minutes after the release, going to the end of the candle, it was 65.5 pips towards the upside on dollar CAD. I think today, as I said, it was about 48 on the initial market reaction pips. We'd seen, 48.8 pips down on the initial market reaction for dollar CAD from the stronger than expected data. And then the figure here in the blue brackets shows you the market reaction 30 minutes after the release had occurred. So this is useful to gauge, depending on how the data plays out, how will you can use this historical data to gauge what kind of trade you should take, depending on how the data comes out. Is it going to be useful to take, whether if you're looking for a 20 or 50k deviation, whatever it is, should you take a long position or short it? How long should you stay in the trade for? When would you likely expect a reversal depending on past data? That is all data there for you to look at to then make your own determination as to when and how you should trade the data when it comes out. Okay. So again, historical data showing you how the markets have reacted to an economic release in the ranges and deviations sheet. Okay. So for the link to get access to the MACROACE ranges and deviations sheet, all you've got to do is sign up to the mailing list here, and you will get an email on Monday to be able to get access to the ranges and deviations sheet, but also a summary of what to expect for the week ahead and a short summary of what had happened in the week prior. So if I just get up the an example of an email that we do put out, or that we have put out in the past, and then you guys can get a better idea, better sense of what we're talking about. If it wants to load. There we go. Gotcha. There we are. Okay, so this is an example here of the email that I'd sent out this week. So you see a bit of a breakdown for each session. It is still quite short and concise, but the information that we used to put in the emails before, there is much more information in the email for you to have a look at. So as said, it gives you an expectation for the week ahead, a bit of a summary of what had happened before in the prior week, and you get the link to the live streams for the week ahead that we'll cover, and the link to the ranges and deviations sheet. Okay, that's what's included in the email. That's sent out once a week on a Monday, usually before the US session begins at around before 8 a.m. Eastern time, around then. Okay, so that's the email. Includes the links that you need. Completely free. There's nothing else to do. Just got to sign up to the main list. and then you get access to the ranges and deviations sheet. You've already signed up. Great. Great. Interlick. I think I've said it right. Just Flow said streaming 1080p. Yeah. That's something that I should. It could be the PC. Might need a bit of an upgrade in that case. Or actually no, it probably isn't that. It's probably just for YouTube, and of course to interact with you guys in as real time as I can without being too real time. Just making sure that I can do that with you guys. But I'll have a look at those settings later on. But yes, as I said, so that's the range and deviation sheet. Financial reduce, where we'd seen the data come through. If you've never heard of a live voice and text service before, or never really come across how to use it, then Financial Reduce provides you what a live voice and text service does is it keeps you up to date with what's going on within the markets, what's happening globally. Maybe there's a speaker that said something that's rocked the markets and changed sentiment, and there's more volatility that's crept through, and you're thinking, oh my gosh, what's going on? What's happened? Then a live voice and text service is there to tell you what's happened. Yes, you can trade without listening to anyone or seeing a text headline that might come through. Cool. But why? Why did it move that way? Do you understand why, let's say, the pound had dropped after Bank of England's Governor Bailey has said that there could be a need for more rate cuts than what the markets may be expecting? You know, things like that there are opportunities that are presented to you that you may not be aware of. Having that live voice and text service to keep you up to date with what's going on. Let me just bring it up here. Let's see. There we go. So, it's not showing the whole thing. Okay. So this headline here, so you had the initial, well, just before this, you had the initial weakness from the pound. And then as it was clawing its way back up to reverse its losses, Bailey then said that it's possible we'll need to cut rates more than currently priced into market rates. And boom, then the pound died again. It had declined. Why? Because Bailey said something. There was a headline that came through that changed the market direction. And then, of course, it did its own thing later on. So, but yeah, if you're day trading and you're looking for those opportunities, then having a live voice and text service is what you need. If you've never come across it before and you've never really understood how it works, that's completely fine. What you can do is you can sign up to Financial Juice, to the free version, and then have a little play with it. Now, remember, on the free version of Financial Juice, the difference is on FJ Lite, there are adverts that are played. There is also a delay to the news site, to the news feed as a whole. So that's a delay to the voice, delay to the text, and the economic calendar on the left-hand side on everything. Okay, but it's still enough to give you an idea or a sense as to how the service works. And if it's something that works for you, great. If it doesn't, then fine. Carry on as you are, and that's perfectly fine. Now, if you want to get the pro version of Financial Juice, question is, how do you do that? All you've got to do is go to this link here, all right, on Financial Juice Pro. Click that link, select your subscription, and then you can sign up. Now, if you haven't got an account on Financial Juice and you pay for the service, make sure you do have an account first on the FJ Lite version, then sign up to Financial Juice Pro. Once you've done that and you've paid your subscription, then log out and log back in. Oh, also one other thing too, when you make the initial account on Financial Juice Lite, make sure you verify your email or verify your account through your email, and then go ahead and pay, and then log out and log back in once it's all sorted. But there's also one more cool thing. If you want to get financial juice for a year for $99 instead of $1,200, then you can get our Juicy 92 promo on here, okay, which I'll provide with the promo code right here. So Juicy 92, there we go. Bing. That is it there. That's the promo code. So instead of paying $1,200 for Financial Juice Pro for a year, you can get with a Juicy 92%, a Juicy 92 discount, get FJ for $99 for 1 year instead. So that is the link there. Milan Arana, we do have Twitter, which actually we've kind of neglected, which isn't great. But that's our Twitter there. Let me just pin this. Okay, that more or less concludes the stream. One final thing with TICKSTRIKE, you did see it. If you're unfamiliar with what TICKSTRIKE is, it shows you the strength in the buying and selling momentum in the assets that you're looking at, whether it's Forex, crypto, if it's equities, your internals like your ADD, and or if it's the VIX. TICKSTRIKE shows you the buying and selling momentum strength via a voice and visible alerts, as you can see here. So these are we can see the ticker boxes. Okay, if I get the Canadian ones up. Okay, there we go. So if we're looking at GPCAD, you can see, as said, so GPCAD, so this ticker represents GPCAD and the strength of its buying and selling momentum. And it will give you a visual and audio alert, or you can choose either or, whichever works for you, or nada, if you want, with whichever one works for you. So here, this number represents the sensitivity of this ticker. Now, it goes from 1 to 15, the sensitivity, okay, this scale. 1 is very sensitive to market reactions. And if you scroll all the way up to 15, and remember you can chop and change it, scroll all the way up to 15, 15 is the least sensitive to market reactions. So only when there's a big amount of buying and selling momentum that occurs within the markets does TICKSTRIKE then give you a visual and audio alert. And you can chop and change that to whatever you want it to be. And then one final thing here with the ticker box. So if you like scalping the markets and you like extreme scalping sounds like an extreme sport. Got like a bunch of guys on like keyboards and like hats with the like tubes being fed into their mouth, like root beer being fed into their mouth or something like that. So here, for if you like scalp the markets, then this lightning bolt, which I've clicked there, goes 15 levels below 1. So remember, if 1 is very sensitive, the lightning bolt going 15 levels below that means it's uber sensitive to market reactions. So I'll show you if I move my mouse away, bing. So every little bit of buying and selling that occurs within that asset that you're looking at, security, whatever it may be, you'll get a visual and audio alert from TICKSTRIKE in that little ticker box that you have there. Okay. So you can look, comparing it to here with EuroCAD, where that's on 1 as well. The sensitivity's on 1. You can see a lot more movement here. And the same thing, you can chop and change how much you want to move that sensitivity there as well. Okay. If you're thinking, well, all right, I don't want to pay for TICKSTRIKE yet, I'm not sure. Same thing again on the newsfeed. You've got the restricted version of TICKSTRIKE, which is completely free to all members, free or pro, but it's restricted to the S&P, Eurodollar, oil, and Bitcoin. And I think the level of sensitivity that it's set at is 6, around less than halfway. So, as I was saying, with that data there, it's got something in my eyelashes. So yeah, if you want to have a little free play around with how TickStrike could work, then you've got like a little demo area, well, a test area that you could say, to see how it works for you. And if when you're ready, then you can purchase TickStrike in the full view. You booked 80 pips on the CAD. Nice. Nice. Well done. Yeah, momentum's kind of just fallen off. So it's but good. Well done. That concludes the live stream for myself. I will see you guys for CPI next week. PPI, as I said, I'll monitor and add to the deviations and ranges sheet as it happens. And then I will see you guys next week. All right. Take care, peeps. Have a good weekend. Bye.